We all should figure out that or understand that AMC is not $34 stock. Looking back at it, AMC was never a $34 stock. This stock, even at its peak age, when everybody used to go to movies, might be worth around $11 if it's doing very well. But it's not. This thing has no future ahead of it, really. It's got a bunch of debt problems. People aren't going to the movies as they used to. There's a bunch of other ways to watch your movies, even if you're a fan of watching the new movies that come out, like Black Widow. Disney Plus releases an option where you can just buy that on Disney Plus and watch it at home. Basically just kind of screwing the movie theaters over. Yo, and welcome to another episode of Roy's Podcast. I'm Roy Spencer.
I'm Johnny Rodriguez, and this is Roy's Podcast. So, Roy, we got a lot of things to talk about. I feel like we haven't done a recap in a while, and there's a lot of things that have been going on in the market. So, let's talk about the stocks that we have previously talked about, which include Workhorse, AMC, and GME.
Of course,
Let's
hop right into that. Starting out today, I think we should help our viewers out by showing them a recap. Starting out with Workhorse. So as we can see here, Workhorse was a name that we were looking at, and this is over a three month span. But this was a name that we were looking at investing right when it pulled into around the 8s or the 9 or the 7 or the 8s, and we called that perfectly. And for a time being, it was just on its tear, consistently making its way through this ups and downs. But as soon as it kind of hit this 100-day moving average, it kind of stopped and dead in its tracks, and has pulled back and has kind of just seen some movement, kind of relatively following this 100-day moving average, and kind of converging back down to the downside. As kind of we thought it might. We like the company's ideas, but with the growth names and these stocks being more so on a pullback now, it was time to hop in and short on it. So we talked to you guys, or I put out an article right around the 7th or the 6th or the 7th of July, telling people, it was a good opportunity to start looking at shorting. We might have missed like the big boat, but there's still a lot of opportunity. And if we are consistent with what we think with the growth names, that they are way overvalued. I mean, Workhorse not really, but it's still overvalued. But we've got them on a tear. We've had also moving over to AMC. We had AMC on this tear. It was part of the meme stock riot, where we had these things picking up hundreds of percents in a day just to, go on its wild excursion. But it's just cause, and there is just, these things are not sustainable. These things, everything kind of converges to what it's worth over time. So as we're seeing it right now, we just got these stocks pulling back. This chart's going to look a lot similar to what the Workhorse did, although it's got bigger explosions to the upside. But it blew up, and has kind of been riding its wave. But yeah, it looks like very similar. And then around the 6th, the 7th, that's when I told people, like, this is the opportunity to get in on shorting. And since then, it's kind of rolled from about the $50 mark all the way down to around where it's sitting today, which is around 35, but it's also touched around the 30 mark. And I think we all saw this coming. The question is when and why. And as an investor, I think this just comes with like a little bit of experience. But when do we start to pull out of our names that we believed in for so long? And I think one of the things that did it for me was the 20% challenge, or not really a challenge, but after you've seen a stock, kind of catch itself like it did up here, and it was rocking along, and you could predict like it was going to have these big jumps and spikes because that's just what it was doing over that span. But as soon as that span and that momentum starts to roll away, that's when we need to start considering what we're doing differently. And after a 20% pullback, it went from roughly being up 60 to being at like this like 50 level, then started hitting 45s. And that's the time as an investor where you start to say to yourself, okay, I think the fun is over, time to get out. And so you have two positions at that point. You have your positions where you're going to hop in, you're going to ride this down, you're going to short it. And there's more on that in the ROIS, on ROIS Investments, the website.
In-depth looks.
In-depth looks where we talk on an article about the do's and don'ts of shorting. But, just riding these waves. And now the wave is a counteractive wave. But I still don't say that being in the part where you're on the outside looking in and just are holding cash is not a bad thing. I mean, of course, if you do the shorting the right way and are really experienced and can capture these short moves, as it's been doing lately, then great. But that's pretty hard. It's like riding a bike in the middle of the Grand Canyon versus riding a bike through your neighborhood. That's not in the Grand Canyon. I really hope it's not in the Grand Canyon. But if it is through the Grand Canyon, then your neighborhood's really rough. But it's a wild ride right now, and this is hard thing to accurately predict and move on with. So I recommend getting either short and buying the puts and holding on to them. And I have a small long-term position, nothing greater than 2 or 3% of my portfolio, and then I pick up small short positions on a kind of a daily basis and just kind of practice the ins and outs on when it gets in. It seems like recently in the mornings, and we can go to like a 5-day chart right here, but as we can see, kind of in the mornings, takes off and hits its downside, boom, real early. And when I'm talking about short term, I mean like on a daily basis. So by 9:45, you see that big. If you're shorting it, you see that big spike up to the upside in your money, and then you know that your fund is kind of like had by then. But if you're a long term person, then you're seeing that this is riding out quite well for you, these movements and stuff. And this exactly the exact same thing happened again today with that. Right at 9:45, it hit about its lows. And so that's when I've been pulling like the trigger, when I've been hopping out on my short-term position, but I still have that small long-term position that I let ride every single day, and that's doing quite well as well. Those expire at the end of the year. Those are some of the puts that expire at the end of the year. And we're just going to let those ride because you, me, the rancher across the street, if that's the case, we all should figure out that or understand that AMC is not $34 stock. Looking back at it, AMC was never a $34 stock. This stock, even at its peak age when everybody used to go to movies, might be worth around $11 if it's doing very well. But it's not. This thing has no future ahead of it. Really, it's got bunch of debt problems. People aren't going to the movies as they used to. There's a bunch of other ways to watch your movies, even if you're a fan of watching the new movies that come out, like Black Widow. Disney Plus releases an option where you can just buy that on Disney Plus and watch it at home. Basically just kind of screwing the movie theaters over. And that's at the movie theaters right now? Yeah, the Black Widow, which is one of their top grossing not AMC, but like Disney's top grossing like films, and it's being played at AMC. But it's getting foot traffic, but it's just nothing like it used to be. So let's see, we've got less people going in. The company has more debt, and it's worth more than it used to. Like, does anybody see a problem with this? This seems kind of incoherent. Like, eventually, we don't know when, but all stocks kind of realize their fundamental value. And so if you're betting to the upside here, cool, like, good for you. And if you capture some of those big moves on calls or something like that, that bounce up to the upside because the stock will have some, corrections and be volatile and might bounce back up. We don't really know, but eventually it's going to reach its long-term mission, which is being around this $11, back where it started way back over here when things were regular. And we're just kind of waiting for that point now. But I wouldn't be caught being on the wrong side of this kind of stock, because this is how you can turn your $1 million that you made from investing in AMC to back down to like $5 because you just didn't hop out and you rode this wave. And just make sure you take some gains at some point, people, especially if you're doing
too
it
long.
Yeah, like the wave's gonna die out. You heard it here first. I'm sorry to break it to you, but these waves, I can't. I'm just gonna promise you that I'm not gonna last forever. So, I mean,
this is a no-go.
This is a no-go. AMC is a no-go. Workhorse, until it reaches lower levels, that's a no-go. And GameStop, I would move over to GameStop to show y'all, but I guarantee we've covered enough GameStop in this to actually realize that it's going to look exactly like AMC. It's just that. It's like they're cousins. And, it might not have like the reasons that AMC does to be falling off every single day, because they're largely based around foot traffic and how many people are going to watch their movies and how good the movies are doing. But, GameStop doesn't have exactly a great reason to be sitting at where it's worth what it's worth right now. So I could see.
Doesn't GameStop also have like foot traffic? Wouldn't that also be a big thing for that?
Yeah, but nobody stopped buying video games. Everybody loves video games, and that's not actually changing.
But you can just buy them, like what you were saying, like same thing. Like you can just buy it straight from the system.
Right.
PS4, PS5.
That's going to stop like the system, like the foot traffic. But see, the thing is, that's going to be an incremental, like slower change, because people have to get the new console. They have to get the online version of the console. There's still so many of the consoles that only take like physical games. Like you won't be able to buy it all online. So you need to get that console, and then you need to have, and it's not like everybody just automatically gets the next new system. I mean, for those people that do, like, yes, GameStop's going to lose their foot traffic, but not everybody's doing that. So eventually people will come to converge to that as like the prices for stuff like that gets lower. But that's why GameStop wouldn't fall as fast as AMC was, because you can see the live foot traffic now going into AMC, because it's based off of movies, how good the movies are, and are they bringing in the same people that they would expect to bring in for the same movie 5 years ago if things were normal. And the answer is no. People aren't going in at the rate that they were, and this is causing the stock. This should cause the stock to be worth less than what it was in its prior days. But the reason, I want to play devil's advocate for a second, the reason that this stock did get to where it was at is because it was part of something called short squeezing, or just like companies shorting the absolute shit out of it and beating its price down every single time, because that's how these big hedge funds were winning. They were pounding it down into the ground, and they were winning every single time. So maybe it's not worth 10, maybe it's higher than that. But the thing is, it's not worth 34, and I think that's like pretty guaranteed.
So, just in terms of like the kind of the human nature aspect of this, with like how you're saying these hedge funds are, pushing down like companies like GameStop and whatnot. What is the CEO of GameStop's view on that? Like, would you say, like, is it something that just like has always been
like their views on shorting and kind of what they're thinking about it?
Just
and stuff?
Yeah, like
they wish it wouldn't happen. They wish it wouldn't happen. They're kind of like, damn, this sucks, because when you look at a company's balance sheet, it's determined by how many assets it has, its liabilities, and its equity. But its equity makes the company worth more because people are investing in it, And with people shorting it, then they're like losing worth. They're going down. They're on their way down, and more down. And when like that happens, the price goes from, like, inevitably a company wants their price to grow because it's worth more. People have stock options in their retirement plan, and they want to retire early. So for their price to go up, that means a lot to them, and they can retire early, and that's worth more. And so when it gets beat down like that, these are worth less and less and less, and the company's worth less and less and less as well with like their equity value. So it's just not good, but it's probably not where the stock should be either. It's really a hard thing to tell at this point, and that's why I wouldn't blame anybody for sitting on the sidelines and just letting this roll through. There's a lot of things going on in the market right now, and with the Delta variant being a very big problem or a perceived problem in our economy right now, and it, with the NASDAQ reaching highs, the S&P reaching highs, it's kind of like, okay, it's at an all-time high, and the stocks, their valuation should be like near lows because, they're just not worth as much as like what they were because of COVID. Like some of these stocks, should be slowing down, not speeding up. And so that's why we see like these pullbacks going on in the market and stuff right now.
So in relation to like other like external factors that can contribute to this, like say a crash happens, right?
Mm-hmm.
Does that, like, how would that affect, like, because how China is their commerce or
mm-hmm.
whatnot is doing very well, and isn't it doing better than the U.S.'s?
Yeah, I would say so.
So would China's their value for their stock market, like, would it go down as well, or?
Well, they're hard to tell. Like if you looked at
right.
like the big Chinese names and the United States equities right now, you see that there's like a bunch of problems with them as well because China had the same recession that we did through the pandemic, although they claim to have like fixed it faster, and maybe they did, but that's like the world being like full blown into a crisis mode is not good for them because China's main way of making money is to sell their goods and stuff to other countries, and when they're broke as hell, they can't buy them. And so China's not making as much money as they thought they would. But that's not the real reason that like any of these stocks for like the Chinese market are, falling in any sort of way. It's just because the Chinese government and, the way their economy is set up is that they control their companies. And, as they've made an example out of for like Jack Ma, if their companies get a little ahead of themselves, they're going to come find you and your family, and they're going to have a nice talk. Nice
little chat.
Nice fireside chat.
A few months.
Yeah, a nice fireside chat with like Slurpees and, pizza. And, it's just a big gathering and everybody has a lot of fun.
Yeah, I'm sure.
I'm kidding. Those chats are probably very foul and will make stomachs turn. And they will make stomachs turn. But
oh my god,
that's like the problem with like the Chinese economy. So you might be thinking after a conversation like this, like, Roy, what the heck do we do with our money? What is going on? Like, we don't want these growth names anymore. We don't want China. The market's pulling back on it. What the heck's going on here? Well,
what is going on?
Yeah, that's part of what we're doing here on this show, and I want to talk to people about a name that I've been looking at, right around this time, and AMC disgusts me. I'm kidding.
Disgusting.
I hate it.
Absolutely
okay.
Trash.
Well, this looks a little better than that, right? Up 21% today? Hell yeah.
A lot of people wouldn't be familiar with like a name for a stock being this long.
Yeah.
So like, what does this all mean?
So this is UVXY, which is a measurement of the VIX. And whenever you see kind of like pro shares and ultra, like, you should just kind of assume that it's a leverage stock, meaning that for whatever it's based around and pegged at, like, when it increases, whatever its surrounding increases, this thing will increase by 2 times that or 3 times that or something like that. And this is a short-term measurement of that, of the VIX. So the VIX in itself needs explaining, and the VIX is a measurement of the overall perceived volatility in the market. And it really goes to show that you can bet on just about anything. But what happened here is, and this is a great indicator of kind of just what goes on in something like this. So we all remember the beginning of 2020, because that sounded like a really good year to have a good time. But you would be wrong if you thought that, because, this COVID thing, whatever that is, started creeping on in. Yeah. You see the price of this, and it's sitting around number 118, 109. Oh, somebody talked about COVID right at the end of February. That's kind of rough. Wait a minute, COVID's actually going to be a big deal. It's actually a really big deal. And then right around, I don't know, 3 months in, we're seeing it. We're seeing this pop off. And this is because everybody in the market's kind of freaking. They're freaking. And if you're owning something like this, for every percent that the VIX is actually increasing, you're making that percent times more. I don't really know what the exact multiplier of it is, but maybe it's 2 or 3 times. And this would have been a great thing to own, right, as everything crashed. Because it's kind of like an inverse thing of, when the market's going up, this thing's kind of going down. When the market's going down, this thing's going up. And remember the market crash going in March? That's what this is kind of measuring. Yeah. And it was telling signs of it prior to that. It's saying, hey, COVID's like a real big deal. Like, it went from being down, kind of around, you see this change right here? Watch this. Yeah. It went from being down around 60 to being down 14 to being up 25 to ending up 240% just on its change.
Wow.
Because that's how scared, and this is a measurement of how scared people are in the market. Volatility, we talk about that a lot. And on the options trading, that's measured with a Vega. And that's just a measurement of how scared people are, because people have no idea what's going to happen next when markets are in turmoil like that, or perceivedly don't know what's going to happen next. If you're a smart person, as we like to think of our viewers being on this show, we're kind of able to tell that, okay, what's going to happen when things go into a crisis mode, and then we have strategies like that. And there's always a buying opportunity in the market. And that's kind of what we're talking about here today. When we just look through GameStop, AMC, Workhorse, those aren't the names you want to own. We see other names that were just doing very well, like Apple, which we talked about, Facebook, which we don't like, but they were also doing slightly well. We see these names having a pullback as well. And if you wanted to get your exposure from overseas, like China or India, we just talked about why those are names not to own. So what the heck are we doing? We're doing this because this right here is a measurement of how volatile the stocks are and how worried people are in the market. But wouldn't it make sense that these are still very volatile? And as we see the weeks pick up, we see it really pop off. But if we look back before this at 3 month, I think this is a better indication of what we got going on. We've seen it declining, just coming down here, and there's not a lot of reason for that. If anything, this was around the golden opportunity of getting in on something like this, because stocks, they're kind of starting to realize that the value that they're at shouldn't be what they're at for a lot of them. So that should be worrisome to people.
Right.
And we've got new stuff in the market that's worrisome as well. We've got the Delta variant, which is something that I really thought was, some sort of fraternity thing. It's not. This is not that. This is not a new strain of marijuana. This is a problem for the United States.
It's not Delta 8 people.
This is not the stuff that you want to be in on. And so we see that, and it's just kind of like a measurement of just kind of where are people putting their thoughts? And it's just kind of they lose track of where the real problems are. This is why we've been looking at this. Because why is this going down? What's going on with this, I mean, it's not at worst levels of all time. The economy, we don't have COVID being a huge scare anymore. Although we do have the Delta variant, which should be worrisome to some people. But, it shouldn't be at its lows. And I think if we zoom out enough or whatnot, we see maybe on a 5-year we could identify this. Nope, not at all. But it kind of... wow. This is just hard to look at. But, like, it has a bottoming out point.
Right.
Like
it's actual value. It's actual value.
Yeah, and it hits that low point, and this happens to many stocks. It has a low point where it won't poke below without any new news. Okay, so it was sitting at around its low point, which is I can't really explain to you here on this, but I'm guessing that it's sitting around like it's 25, and that's like around its low point, and then with new news being introduced to the market, it blows up. This is golden buying opportunities. These are things that we should be cognizant about. Okay, stocks are falling off a cliff, as we should expect, because they're not worth what they are. We got new news in the market about COVID. We've got people cutting down and cracking in on regulations, and I think we're going to talk a little bit more about that soon. But COVID's got some new regulations. We've got crypto with new regulations. Like, people should be a little bit worried right now. These are not things. These are not the inviting stocks and ETFs and stuff that we thought that they might be. Maybe they're hitting their peaks, and there's good reason for that. And I heard a saying once that I believe is true now for volatile situations, but cash is king. And there's.
But what about the inflation of the dollar?
That's a really good point. That's a really good point. So what do? You just do nothing? You want
to put it into assets, or like
okay,
not necessarily homes, but like an SUV.
Okay, I like that. I like that idea. But those things all depreciate over time, and your car is not going to run like the way it did like a few years ago. So maybe if you really have enough money, you get out there to buying a house or putting your money into a house, because those are things that really don't decline over time. Those are things that are like guaranteed good increases.
If you were super, super rich, and say you're taking everything into factor, would you, in terms of taxes, say you don't want to be taxed, right? And you're trying to figure this all out, including, you're thinking about the stocks as well. So house is taxed, but are there certain assets that aren't taxed that you could put your money into, so you're kind of like, it's safe, you know what I mean?
What do you mean? Like things that aren't taxed?
Because if you're holding on to cash, and there's a possibility of inflation, where is somewhere that you could put your money so that it's safe and it's not like depreciating?
You know what? I think that seems to be the golden question right now. And some people would say having cash is key and king, because when you're facing equity markets like this, where the growth names are falling off, we've got the names that are fundamental that are falling off. Where is the picking spots? Those might not seem like it. Okay, it might seem like foreign investments might be it. You can buy ETFs that do invest in things worldwide. Like there's an India one. I think the top winnings one last year was Vietnam or something like that, because of how they were going off. But they're having problems with COVID. We are blessed to be in the United States, if that's where we are. That's where the viewers are, because they did a fantastic job here in the United States of getting rid of COVID really quickly. There's still parts of like the world that are doing really terribly. Haven't figured out too much in terms of that. They've got rising cases higher than they did in the first few weeks of COVID. It's just
India.
So it's just not a place to be. You can't be abroad right now with your money. So I mean,
even
do you sit there? I mean, maybe with the Swiss banks, but that doesn't really do anything if like the dollar is like experiencing like this inflation. So even if you're taking a hit with inflation, and you're not making any money, it's better than putting it into stocks and losing money, right? Because then you're losing money and you have to account for inflation. So I would really just kind of wait for golden opportunities to come around. Keep most of your cash on the sidelines. As I talked about, I think in our last podcast, I had been keeping a very low profile on positions. It's not time to, when I was really going at it, pounding into these stocks, because I was very certain. Now I'm more uncertain, and that's all the more reason to invest in a company like the UVXY. Because
is this a company?
It's not a company.
This is a real company.
No, this is not a company. Thanks for catching that. It's not a company. It's an ETF based around a measurement of the market's volatility, which is the VIX, and you can trade that because there's sediment going into that, and so
can you explain what to people who don't know what is an ETF?
An ETF is just kind of like a culmination of like a bunch of things, or maybe equities, futures. It doesn't have to have just stocks. It could have bonds in there. Okay, and also we can talk about bonds. We don't want bonds to be our thing either. Like, I don't see any sort of like an increase going on in the bonds right now. I mean, you really, if you're sitting there with your money right now, it's probably a good time to just hold it. Maybe you see inflation being a thing, and that's what a lot of traders that like we interact with online talk about. So if you're betting on inflation, right, and that's going to be a huge problem, then you'd want to invest in the bank names, because how does it all work when like banks are with higher inflation? That leads to higher interest rates and stuff, and these are things that are good for banks, because if their interest rates are higher, they charge higher interest, and then they're getting paid back more for the loans that they have. So that's good for them. And if you want to bet on something like that, then maybe it's the bank names, but that really hasn't ever been for me. I mean, at least not yet. Maybe as I get a little bit older, I'll try to like hop in on those, but I just didn't think that was exactly for me at the time. So, and it's something that I know nothing about. I like to say, as like an investor, I at least want to do like or get familiar with the stock somehow before I just jump right in on trading it. And so, even though I know they exist, I don't think it's going to be something that I'm mad focused on for at least a good amount of time. And so that's why I recommend the VIX.
Yes. So VIX is a
money maker.
Okay. Now, I find it so interesting that you bring this up, actually, because I noticed something. I noticed a crypto on my exchange that was always, whenever everything else was down, it was up. And I looked into it, and it's actually called Everpedia. It's a decentralized knowledge base, right? So when everything else is down, for some reason, this one's always up. So this is what it says about it. It says Everpedia is a decentralized knowledge base and DeFi, so decentralized financial platform that includes a prediction market, money market, and synthetic asset system. The IQ token powers all applications and is used for governance of the system. And it says in the last thing, it says the Everpedia price page is part of Crypto.com price index that features price history, price ticker, market cap, and live charts of the top cryptocurrencies. So that's very similar in a way.
What's that called? What was that
called? It's Everpedia.
Everpedia.
Okay. Yeah. And that makes sense because people are trying to get a read on what the hell is going on. So that would seem like something.
Yeah, I'm glad that like you noticed something like that, and I think that's something that I wanted to talk to you about anyways. Is like what's going on with cryptos? I see those kind of sitting. They had to crash down to like around 30,000, and then they bumped back up to 34 or 35, and here we are again sitting at the 31 level. Is Everpedia something that I would want to look into right now?
I believe so. I think it's yes. I would say yes because since I've been looking into it and since I noticed this a while back. maybe 2 months ago, month and a half ago, I don't even know. But I just noticed like every time Bitcoin, Ethereum, all the big names are down, this one is up. And it's not like a meme token. It actually, it's actually like a real, they provide value.
Right.
And so I would definitely say look into it. It's super cheap right now. Like super cheap. Like I think I have 2,000 of them.
Wow.
Yeah, and so yeah, it's just very cool. And that's also something like that you could, you could literally do what you were saying earlier with how you wake up at a certain time, when things are gonna, like it's gonna be at this price at this time, and then because you at least know like the waves, right? It's gonna hit a high here, waves.
And then that it's gonna like hit a low here at this time. So when you wake up, you're like, boom. All right, it hit its high, boom, now it's at its low, hop back in. And that's just what, like, the feng shui of when you start trading and really know what's going on, or really know a stock, you know what to look for. But we're talking, we're talking in, like, a way that you don't have to be, like, master Zen people to, like, trade stocks. We want everybody to be invested in like, the stock market, get your money wet, dip your feet into the market, but there's got to be, you got to have awareness at some points that it's time to just either short it or just sit there and just kind of be like, and then wait, because, waiting is the hardest thing, but, it's also, it can be one of, like, the most rewarding things when you're trading. You got to have your patience.
So, going off of that, more into crypto, Bitcoin, obviously it's down. It's down a lot compared to when it was at its 60K high. So if people look at the chart from in 2017 when Bitcoin made its that the first thing that kind of exploded for it,
it's high.
It went up to 30K. And then it went down a little, and then it shot back up to the high of 60K. Now it's literally at right now. It is at 30,000, probably around $30,600 something dollars. Now, if we can maintain it, between 30K and 40K, then we're kind of in a safe zone, and we can expect it to eventually go on the uptrend. But for right now, I would like for anyone that's thinking about investing in it, I would say just wait a little bit longer, because if it does drop below that 30K threshold, then
is there a chance that all hell breaks loose?
There's a very big chance that goes down, but I don't think that's going to be the case, because with regulations being more being placed more on crypto and whatnot, and on July 26th, they want an answer for how these are going to be handled. So I think that what they're going to want is for Bitcoin to be, kind of a reserved currency.
Like the government's going to want that.
Yes, the government is going to want that.
Okay.
So I don't know if it would benefit them for it to go down below 30K. I'm not sure about that. I've never even, but.
But that is something wild to like understand, is like that companies have these certain sticky points, where they're like a measurement of like, okay, do I want to be in on the stock right now? And if yes, then here's my like marker. And if it goes below that, then no. And if above that, then yes. And I think you did a great job of what we talk about on the investing website, roisinvestments.co. Is when a stock is at its like low point, that's what we call our local minimum, and when it's at a high point, that's like its local maximum. And it looks like Bitcoin is sitting around its local minimum right now, and that might be a safety spot right there. And if you were able to sell puts, I would recommend hitting that button all the time. But if you see it creeping under the 30,000, then you might want to start being like, this is getting risky, and so you don't get caught in the sticky points. There's sticky points, and then there's giant drops and stuff like that, and you don't want to be in on a giant drop.
And something I think to clear up would be, so like when we were dabbling with the futures trading for crypto, they have the options for opening long or like short and whatnot. So like they're not. That's like the crypto's version of selling calls and puts, right?
Yeah, that is that. That's true.
Okay.
But I mean, so we expect cryptos to do something though.
Oh yeah.
So why not bet on either side? Have you ever heard of a straddle?
Yeah, I've been straddled before.
Oh, okay. Well, shout out to you, man. But okay, that was funny. But what's going on with the straddle is you got your like little market thing here, and then you got your price, right? Wow. Yeah, that's your stack. It's killing it. Nice. You should get out of that. But what's going on with the straddle is you got this upper line and you got this lower line, and I drew a circle around kind of like the upper line and the lower line here. And
I can't see it.
See it now? The circles around the upper and the lower line. Yeah. So what's going on with that is that's a straddle. Is that it's a bet that it's going to go down. You're buying calls and you're buying puts.
Right.
But why would you want to do that? What am I saying if I buy calls and I buy puts?
You're saying you just don't want to lose money, essentially.
You're betting that it's not going to sit there. You're betting that it's either going to go up or it's going to go down, but it's not going to be worth, if I'm talking about Bitcoin, it's not going to be worth $30,000 at the end of the year. Right. It's going to be something else. It's going to either be lower or higher, and it's going to be substantially in one direction or the other, doing one of the other.
I'm going to throw out I'm going to throw out my my ROIS listeners and our fans. We love you, and I'm just going to throw out a crazy speculative, optimistic future outlook for Bitcoin. I think it is going to go up to 100K. That's just what I believe that, and it sounds crazy looking at it right now, but if it does not break this 30K, like if it does not go below that, like it's just going to be on the up and up, just like in 2017. It's repeating a similar thing. It's just at a higher, more money.
But these things take some time to have happen, though. Like it literally did that thing in 2017, and then it took it some time before it got to 2020 and hit that 60. So I mean, these things could take time. It could take like a year or something. But I do agree with you in that it will hit around 100. And I do have some money just sitting in my cryptos, but as we're saying, I've got most of it on the sidelines. So, cash is king. I'm holding it. That's probably the biggest part of my portfolio right now. It doesn't sound like an investment when you're just sitting there with cash, but I'd say 90% to like 85 to 90% of my portfolio is just sitting there in my portfolio bin, just waiting for that opportunity. Some of the best traders that sit around and trade only make something between 20 and 30 investments a year.
Oh wow!
Right? Because they're disciplined.
So they're
disciplined.
Investors, not traders.
They are investors and traders at some points or another, but they're disciplined. They know they gotta sit there sometimes and just be like, this is not the environment for me. You don't go outside and run around on a day where the temperature is 150 degrees. You stay inside, play it cool.
Right.
You wait for that heat to go away, and then, when it starts to hit 80 degrees outside, you're like, wow, this is great. Yeah, let's throw some football. Let's play some soccer. That's when you're outside playing around. But this is a harsh terrain for a lot of things. And kind of, I think, a great overall summary of what's going on here is that growth, that's scary. The market, that's at an all-time high. Maybe it continues, maybe not. But I think that could be due for a pullback. We've got the cryptos. That's looking like it's iffy right now. We got a major point where it's got to figure itself out right here. Does it dip below 30? Does it keep going up? If it holds this mark, then maybe it's a good opportunity. And when we see it starting to creep back up, but it seems like right now is a good time to just kind of be observant, hop in, check out your prior trades, what did you do right, what did you do wrong. I mean, it sounds silly, but going back through to see what you did right and wrong, you can learn a lot from it. And if you don't,
learning.
Yeah, that's what we're all about here on this show. Not just throwing money into stuff just because you're bored. If you're trading because you're bored, right, just give away your money, because that's not really what this is all about. It's more about growing your money and stuff along those lines.
If you're bored, then do what Roy recommended in one of our previous episodes. What was the name of that site with where you can have the imaginary money?
Oh, yeah, you should maybe. I don't know how it works, or if you can, or in terms of if you can reset it or not to get back to it. But it's called Thinkorswim by TD Ameritrade, and it's not exactly a site. It's something that you should download. You should download and put Thinkorswim TD Ameritrade on your account or on your computer, and then you should open an account with them so you can trade the paper or the fake money that they have set up for you, because everybody starts at $200,000, and then you can really figure out your trading strategy at that point. Wow. Hop in, do something like that. Figure out what's going on here in the market. Figure out, maybe find out a way that you're seeing massive dough riding in right now, and you don't think it's the Grand Canyon terrain that I think it is. I would love for you to give me a call. Hop on in, because there's always a buying opportunity somewhere. I just haven't found it, other than what we identified here in this show, which was investing with the VIX, which is the measurement of the overall market, or the perceived overall market volatility. So
just to be clear, we're not talking about VIX Vapor Rub.
I mean, that could be relevant in some sort of way, because when the markets are iffy, I start to feel a little bit more sick. And that would be a really good opportunity to have VIX Vapor Rub on me as the VIX is increasing. So,
I'll tell you what, man. If that is the case, there's a lot of Hispanics just waiting to get on that trade, because it's in the community.
Yeah, big VIX is big.
Oh yeah. It's like you break a leg, your grandmother runs out, put this on it.
I got the VIX.
No.
Is she like, I got the VIX? Yeah. Have you seen that? Everybody hates Chris.
Yeah.
when he's just like, oh, he broke a bone. Let me get the Robitussin, and they run out there.
Is that really?
Yeah, and that's like the equivalent of what VIX is, and it's just like, I popped a tire. Don't worry, I got some Robitussin. It's just like, it's the one cure-all
solution.
Of course. So, we kid.
Oh, that's a good analogy.
Maybe don't invest in actual VIX Vapor Rub, which I think is product through P&G, and that's just like a very slow moving company. So maybe don't invest in that VIX. Invest in the VIX that measures the volatility of the market, and that is VIX. If you want to check it out, the VIX, the VIX.
But what was the one that you showed the chart of? That was like a specific one.
That is an ETF of the VIX. You can't trade the VIX directly because it's just a measurement, but you can trade something that measures, or that allows you to trade that measurement, and that is the UVXY, which is a leveraged thing that keeps track of where the VIX is and then has a multiplier. So if the VIX goes up, then this goes up by... If the VIX goes up by 1%, this goes up by hypothetically 2 or 3%, something like that. It's leveraged, so it gets more than what it is, but also has bigger losses when the VIX has a loss.
Right.
But we're talking about investing or trading it when it's down near its lowest points, which was what we kind of identified what it was going towards. So hop in on something like that, and then just wait for it to boom, explode, and that's when you get those big money moves. And that's what we're always looking here to do on ROIS investments.
Hell yeah. So we're saying for VIX, it is a buy.
We're saying for the VIX that the VIX is something that people should look into. It hit a 21% increase today, so I wouldn't say it's exactly the time. The train is moving. You've missed a good part of that gain. But, you know, if it arrives back into the station again and hits that like 25 level, then I think it's a good time to like maybe think about it. One thing I want to caution people on is that I think the UVXY, since it's a short-term ETF, it expires someday, which is bad, because it's like an options contract itself. So as long as it's not receiving any big jumps from the VIX like that, it's just going to slowly trend down, because it has a time variant where it's like, okay, it expired here and then it's no more. So eventually it goes to zero. You know,
and it just dissipates
it just dissipates and then a new one's opened. So unless you're having a real bet that like it's actually gonna, you know, pop off soon, which is what we were thinking, because it was like the VIX was at an all-time low or near its all-time lows, and that just doesn't sit right with me because the market's so uncertain right now, and people, you know, are still struggling. There's still a ton of unemployment, and there's still, you know, we're looking at things that are in we're just looking at things that are not like going exactly well in this economy. And I mean, it seems like we're getting onto a depressing track here, but it's just how it is, you know.
That's why I had to toss in the laughter. You know?
Or if you don't laugh, you cry, right?
Right, yeah, there you go.
So at least
you're just stagnant.
Yeah, and then we don't want you here anyways.
Yeah.
I'm kidding. I'm kidding. Be whoever you are. Just be here. And I think that about wraps things up from like what we have going on here today. Johnny, you got anything else to add?
Awesome. That's pretty much it. The only the last thing that I would say is look into NFTs. I think that there's a big future for them, especially in terms of Decentraland. Like, Decentraland has actually partnered up with, I believe, the creators of Fortnite, and I want to say like Call of Duty, but I'm not 100% sure on that, so don't quote me on that. But I do know Fortnite, and eventually they're working on. I don't have the name off the top of my head. I'll put it in the description. But you're able to create NFTs and then sell them in like on this, you know, open world video game essentially, and you can sell like skins, you can sell items, whatever, and actually make real money from that.
Wow.
So that's something cool. Decentraland.
Hell yeah. That sounds like that NFT grind that we're starting to like proceed into. So that's good stuff, Johnny.
Yes.
Thank you for bringing that
awesome.
up. Well,
thank you, Roy.
Well, with that being said, you know, this is another great segment. We appreciate you all for being here and checking this out. And you know, stay wealthy, stay rich. It's a mindset. And
and just remember, you know, like sometimes things go down. You know, Roy, that's why his roommates kicked him out, and now he has to live in the closet because that's just how it goes, you know.
Did people realize I was actually in here? Shit, I think I got to change up my location now. My roommates are going to be after me in a few seconds once they realize where I'm at. It's too late. There might not be another podcast.
They don't even know that you're still there?
No, man. I've just been in the closet the entire time. Shh. I've been being really quiet this entire episode just so they don't know where I am.
Yeah. But, all right, guys. Well, thank you so much for listening.
And if I'm here if I'm here again, then we'll have another podcast. But if I die, you know why.
Yeah, if he's here again by a miracle, yeah, we'll definitely run up another. But if not, it'll just be me, and I will present a picture of Roy's body, dead.
Like this. Well, I'll be dead. I'll just be like. But
oh my gosh.
All right. Cool.
All right, guys. Remember, stay smart, make money. Good shame.